Hey everybody, Boris with PK Forex. Welcome to the crosses section for August 21 to 25, 2017. And this week, I really have a couple of interesting ideas. First of all, the grander theme that I've been talking about, of course, earlier in the videos, is this whole idea of relative strength to the calm dollars versus majors. And I have a couple of trade ideas regarding that. But the second big theme, I think, if we believe that the worst of all of the risk angst is over, meaning, no more political turmoil, things get calmer and quieter, risk appetite comes back a little bit. If we believe that that thesis kind of develops as the calmer, quieter end of the summer flows come into play, then there's another trade that I think is quite interesting to take a look at, especially because it's against very, very strong technical support. So the cross ideas I have laid out so far for you guys are the following. Pound Aussie to the short side. This is really a trade on relative weakness of the pound and relative strength of the Aussie, which I kind of really like. And if you look at it technically, you'll see that 65-60, a very, very nice corridor with a clear downward bias. The risk trade that's interesting is the Euro Swiss, which has held this 1250 support twice now and looks to be like it's ready to maybe re-challenge back the 1500 flows. Again, based upon risk flows. What brought the Euro Swiss down was the massive inflows back into the Swiss franc, as everybody had terrible risk aversion flows prior week and this week. If that trade gets reversed, if everybody sort of eases into the belief that risk flows are going to be back on, and even if Draghi does not say that they're going to taper instantly, but just provides a tiniest of hints that a taper is coming, that ECB is moving towards a more restrictive monetary policy. That alone, just any type of hint that yes, the economy in the Eurozone is strong enough to abate monetary stimulus, should be very positive for Euro Swiss, as the market is going to start to anticipate all of these interest rate flows back into the Euro versus the Swissy. And the last trade that's sort of very interesting is, of course, again, this is the Euro corrective trade. Basically, if you believe that Euro gets corrected more than anything else, the Euro cat to the short side with 150 resistance and support at 146. Let's take a look at the charts here and just see how everything sets up on the technicals. So here's the, let's take a look at first at pound odd. This is the daily chart. We could actually probably take a look at the weekly chart as well. But you see that daily chart is just butting against this key support at 162. This is truly a momentum trade. If we break the 62 to the downside, it has full flow all the way down to 160. And this is, in some ways, I think, less a trade about Aussie. Aussie pretty much is going to stay stationary, maybe trade up a little bit. It's really a trade on whether cable breaks below the 128 handle. That creates this whole massive flow right to the downside. Overall, of course, if you look at on a longer term chart, this is a classic downtrend with a failure of lower highs continuously. On the weekly, it's also quite, oh, sorry, let me go through weekly here for just 1 second. On the weekly, you can also see that it's, it's coming up against a very, very big support here at this 162 level, but really it's 160. It's this very, very far away, so it's kind of hard to see. It's really the 160 that becomes the target here on the weekly that makes it an interesting trade. Now the next trade, and here I'll take a look at the weekly first, and then we'll go to the daily, is the Euro Swiss. The Euro Swiss had this massively strong breakout, which we obviously got behind very aggressively, and we liked the move to the 115. It made the natural move towards the 115, which was a natural resist point. It came back twice now to hold the 112.50 level. And in many ways, this is really a trade on two things: risk appetite and ECB beginning to tighten. So if we can get just any kind of mild positive risk flows at the beginning of the week and ECB hinting at the end of the week that yes, they're going to tighten, we have a high probability that the trade moves right back towards retesting the 115. Conversely, if fresh turmoil, fresh tumult in the marketplace, whatever new drama comes out of DC, and Draghi stays completely mum, this can break. And if this breaks the 1250, it's a very, very negative construct. It would essentially suggest this whole move was a false rally and would go right back down to 110. So You can trade this both ways, but I do think that for now, the path of least resistance or the higher probability trade is that we still have more upside to go, and it's an interesting risk trade as we go forward. And then the last trade is just the the euro corrective trade, which I like, especially because CAD. This is the weekly chart, and on the weekly chart, it comes very much close to the low of the weekly, which is a good signal suggesting there's more momentum to the downside. If you look at the daily chart, just change this to the daily. You can see there's certainly scope to go here towards the 146. Again, double top failure at 150. Scope to go towards 146. Oil trades up towards the 150 level. That takes dollar CAD to 125. That certainly gives us scope for more corrective move in the euro dollar. Or euro dollar comes under a little bit more fresh profit taking before the end of the week when we have the ECB, or ECB disappoints and then euro comes in for serious profit taking at the end of the week, and that creates a move all the way down to 146. So lots of different ways to trade the crosses this week. I think in some ways that's probably going to be where most of the activity is going to be. And hopefully you guys have a great week. I wish you guys the best of luck, the best of trading. Boris, over and out.